The Bank of England today decided to keep interest rates at 0.5% and also left QE asset purchases unchanged at £375 billion. Annaliza Piazza, market economist at Newedge, joins me on the line. Annaliza, what do you make of the decision?
Well, I strongly believe the decision was widely expected, especially the markets were not pricing in any other measures to deliver further accommodation in the Bank of England policy rate, especially because policymakers have recently announced the extension and expansion of the Funded for Lending scheme that is still filtering through the real economy in the UK. So I would say there was no expectations whatsoever for a further easing after today's meeting.
Do you think the BOE should have made a cut?
Well, I think a rate cut was completely out of their plans, and given that interest rates are currently very close to zero, there was no need to cut rates to give a further stimulus to the economy. At the current stage, we've seen the UK economy gaining some momentum in Q1, and today's data on the industrial production were also supportive for this outlook of a slight improvement in the real economy. So I think at the moment there is really no need for further accommodation, and especially for a rate cut, because the effect on the real economy would be very, very minimal.
The UK recently avoided heading back into recession. Is this a sign we are back on track to economic recovery, or do you predict the UK to go into recession in the near future?
Well, I think we need to look at the numbers with a kind of skepticism, because there's still downside risk for the UK economy in the near future. But obviously, the outcome of GDP for Q1 is welcome news. We've seen some improvement especially in the services sector, which is the main engine of growth for the UK economy. At the moment, there is still the risk that lower demand from abroad could hit the UK economy in the futures, and the recent data seen in the Eurozone or in Asia or in the US, where the economic cycle is especially in the Eurozone, is still very poor, and signs of some moderation both in the US and Asia not boding well for the UK net trade contribution to growth in the futures. Domestically, we need to look at UK households' disposable income, which is at the moment hit by very low earnings growth, and they could be seen as a potential risk in the future. So good news on Q1 data, but there's still some risk on the downside. I wouldn't say a very high risk of a recession, but definitely of some more sluggishness in the future.
Do you expect the central bank to embark on more QE anytime soon? And if so, do you think this will be effective, considering UK growth is lacking?
Well, I think more QE is not out of the Bank of England plans completely, but I don't see any additional asset purchases in the next few months. If it happens, it will be at the end of the year, when the policymaker will have more indication on the development of hard data in the UK, and possibly also the impact of the past accommodation measures, especially for the credit market, for the housing market, which is at the moment something that is kind of supporting the slow economic recovery in the UK.
That's all for now, but stay tuned to Dukascopy TV for the latest financial news and updates. Goodbye for now.